What's up, traders? Welcome to another edition of Ask John. In this email we have, I'm not sure if his name is this guy, but we're going to call him Jay, okay? Jay sent me a message and we're going to look at this. So let's get into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, so let's get straight into Jay's email and we're going to see exactly how I can help him out here with this. He said, "Hey John, thank you ahead of time for your advice you provide. I'm interested in knowing how you felt about reading Bitcoin charts. Do the same charts and chart readings apply to Bitcoin? I would like to day trade Bitcoin and could use some help with reading the charts." And he also put a link to the chart he's actually looking at, which is a 15-minute chart, I think it is, from memory. He said, "Please advise as to what you would feel may be best trading intervals to charts since it is so volatile. Also, most importantly, please confirm what the blue and yellow line means, as well as long as the right side of the chart with the red and green lines." Basically, it's moving averages on the charts. Lines continuation pattern. Any advice would be much appreciated. This is actually Jay. So Jay, or actually known as Jeff in the email. Jeff, great question, and I want to be able to help you out here. So firstly, I want to go over this email and really break it down here. You say that you're trading Bitcoin. Now the question I'm going to ask you is, why are you trading Bitcoin? Because if you're trading Bitcoin because it's volatile and you can make a lot of money, you also can lose a lot of money. Make sense? And I always want you to ask yourself this. Am I trading a style? Is my trading style likely to fit into my overall ideal lifestyle? Does my trading style fit into my overall ideal lifestyle? And the reason why I say that is this, Jeff, is that because later on moving forward, and I've done this, and I've been doing this for 10 years now, and way back I was trading the Aussie market all day, the European market at night, then even the S&P, and then trading options on the stock market in the US. I was trading so many markets, but I realized I wasn't setting myself up for success. Makes sense? So, what are you trading Bitcoin for? That's the first thing. Is it trading because you just think it's the best market to make money out there? Well, the answer is wrong, right? Because you always got to ask yourself, what is my ideal lifestyle, and how can I have a trading style to fit my ideal lifestyle? Now, my ideal lifestyle is obviously in the way I trade. Now, I live in the land of down under, the Aussie market, okay, Australia. But the way that I've set myself up is that I trade the US stock market, which closes early in my morning, right? So right now, as I do this video, it closes at 8 o'clock in the morning. So I get up and do a couple of hours worth of trading. And because I'm trading options, I'm getting the leverage, which is increasing my profit potential. But I already have a really good trading strategy. Makes sense? So I have a trading strategy that's based on the price action, and then I trade just a couple hours during the morning, and then during the day I'm off to do the other things like these videos and like my other coaching course for my private clients, and health stuff and property stuff and all these other hobbies that I'm really interested in. Makes sense? So that's the way that I've set my trading up. So I trade it for a couple of hours in the morning, and during the day I'm not looking at any charts. I used to want to look at the charts during the day. Now every now and then I might look at the S&P E-mini live chart to see what's happening on the E-mini charts. But for me personally, my trading, I have over 1,000 stocks, because you got the S&P 500, you got the Nasdaq, or you got the Dow Jones 30, you got the Nasdaq 100, and you got the Russell 1000. Russell 1000? Yeah, Russell 1000. So collectively, you've got about 1,100 stocks together, about 1,100 stocks together that I can actually trade. Now I'm waiting for a really good high probability setup on my system, and then I'm looking to trade options because I get a really high win-loss ratio, around about a 90% overall win-loss ratio. Now because I have that, I trade options, so I simply just buy options, and I do some other funky strategies as well too, but I just buy options. And the reason why I buy options is because it gives me that leverage where I can generate a good 50, 60, 70, sometimes 100% return in a matter of a week, or even like the trade that I got out to last week where I generated like a 60% return in 3 days on my trade. I'm in, I'm out. Makes sense? And all I'm doing is I'm trading a couple hours in the morning. Does it make sense? So that's the first thing I must say there. I must say that, you know, what is your ideal lifestyle? Why are you trading Bitcoin? You may ask that. No matter what market you're trading at, they always ask you, why are you trading this? And can you keep trading this moving forward? Now, the way that I trade, if I want to go on a holiday for a week, I have other strategies that I trade within the same markets that I trade that are very similar, that I can do about 3-4 hours worth of trading during the week, at the start of the week, and then I'm off during the week, and I've got trades moving for me and generating income for me. Make sense? So you actually say here, so you say, please advise what you may feel the best time to interval charts. It just depends on how much time you can consistently dedicate to the trading. And I mean consistently. This is where success comes from, trading. Consistently dedicate yourself to a certain amount of time. Now, and it just depends on what you're looking for. If you're looking to scalp the market, obviously you're looking at a 5-minute chart or a lower chart, right? But it just depends on what you're happy with as well too. Now, way back, many years ago, probably about 6-7 years ago, I was trading heavily the E-mini chart, right? And I went as low as the tick chart. You know, then a range chart, then a 1-minute chart, and then a 55 tick chart, and then it went up to a 5-minute chart. And then as I went on, I realized there's so much movement through there that I'm making a lot of mistakes, but two, it's actually hard to stay in front of the charts all that time. So then what I end up doing is I end up meeting one of my coaches who helped me understand the difference between the daily and the 60-minute chart. So what I was looking for, I wasn't just looking for a quick in and out, I was looking for 1 or 2 trades that was fitting on the daily chart that were also timing my in on the hourly chart. So you're saying what sort of interval you're trading, again, just depends on what you want to do. Now for me personally, I like looking at the 60-minute chart as an interval because I'm looking for a bigger profit and I'm happy taking a bigger stop as well too. But the reason why I'm happy doing that, I don't trade the 60-minute chart now, by the way, but the reason why I'm happy doing that is because if you think about this here for a minute, the less time you have to focus on the market on a consistent basis, the less mistakes you're likely to make, right? So you look at your daily chart, you see where the high and low ranges are, then you go to the hourly chart, see where the support and resistance are, and then if you can time your way in on a good entry, you do that. Make sense? So on the hourly chart, for me, I might have maybe 1 trade per day, maybe 2 maximum, right? But I'm looking for a bigger profit, and I'm happy having a bigger stop as well too. But I'm much more patient waiting for the right setup. Now you need to ask yourself what sort of trading strategy, what sort of trading style, again, to fit your overall ideal lifestyle, but also when you look at the interval trading, the intervals, you've got to understand the setups, you know what I mean? So if you want to get in and then have your stop and you have your profit target and walk away for a couple of hours and then come back and see what happened to your trade, then the hourly chart is that. But if you're very happy and you can consistently spend maybe 4 or 5 or 6 hours in front of the charts, then the 5-minute chart can do really, really well if you have the right setup and you're patient and you're disciplined and you're saying, I'm waiting for this perfect setup, the right setup. If you do that, I have mentors right now that try to make a lot of money that trade the 5-minute chart. Make sense? But just know that those 5-minute trades, they're very short in and out trades. Make sense? And then you also talk about the different moving averages. Now, moving averages on the charts, guys, if you're using moving averages, they should be used for one thing, to help you understand where the momentum is, right? So I use two main different moving averages. I use the 52 and I use the 20 moving average. Now, they're just simple moving averages. There's nothing funky about them. And what I'm looking for with those is I'm just looking at the direction of those moving averages, right? So let's have a look at this on this whiteboard here for a minute. Okay? Let's have a look at this on the whiteboard for a minute. If I have... Actually, you know what? I'll just explain it to you on the camera. When you're using moving averages, what you want to do is, I use moving averages as a gauge of where the momentum is, because where the momentum is, I want to be trading that way, right? So if the market's going down or the market's going sideways for a couple of weeks, and suddenly you get the moving averages start to come together, make sense? let's just do this here. You can probably see the whiteboard there, right? So the market's coming down, the market's going sideways, but then suddenly the moving averages start to do this. Right? What's happening with that market at that time? There's no momentum at all, right? But if the market starts to fall, and you get the 52 down here, you get the 20 down there, there's a gap between those, now you've got momentum starting to pick up on that steam, right? So momentum from the moving averages for me is meant to show where the momentum is in that market, because that's where I want to be trading. And if that's the market, if this is the stock market, if this is actually maybe one of the stocks I'm looking at with the moving averages, then the market could be doing this, right? And then it comes down and comes back up. But if it comes down and comes back up, and I can see both my moving averages pointing down, well, I'm looking for an entry. I'm looking for a short entry, or to benefit from the downside, somewhere around about when the market starts to come down, starts to pull back. I'm looking for a really nice entry signal here, because where is the momentum? The momentum's down. The market's breaking out, and it's also going through what I call the next extended phase. And you'll notice what markets do, they go through phases, right? So the market will come down here, and it'll have an extended phase, and then it'll go through a distribution phase. And then the market will go through another phase, and then it'll go through a distribution phase. Now that distribution phase might be a 50% pullback, it might be just sideways, you just don't know, right? But that's what generally markets do. They go through an accelerator phase, then they go through distribution phase, then they go through another accelerator phase, then they go through distribution phase. So, if the market's already gone through an accelerated phase, well then what you want to do is you want to stay out of it for a while until it's ready to now start to go through another accelerator phase. And how do you know it's getting ready for another accelerator phase? Well then you're looking at both the moving averages to see the direction on those. So anyway, I know that was a long-winded answer. I know I add a lot of stuff to this video. Watch it over again if you want to, and I hope this helped you out, Jeff or Jay. Hope this helps you out to some things to think about and some things to look at while you're trading. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.